Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to a brand new episode of Markets Tomorrow, the daily market analysis show, where we look at what happened in the markets during the day and how we can plan for a better trade for the next day, right? So, February 15th, Tuesday 2022, that's what we're going to look for tomorrow's trade, right? So, it was a bloodbath in the markets today. Let's get into the charts and see what happens. So, as usual, the pre-market analysis for Feb 15 Tuesday 2022 will be based on all these parameters that you see on the screen, right? We'll have additional data analysis also and a wrap up also. So look at the candle, look at the fall, look at the gap down, big gap down that happened both indices. How much was it? 3% in a day, 532 points in single day. Probably this is the next biggest fall after the COVID crash. And 1,600 points gone, 4% gone one day in the Bank Nifty. So intraday also it was 1.5% of gap up, gap down, and the morning session is, and then it was in the afternoon it was big fall again for the remaining of the 1.5% gap down. So intraday this was action, gap down, and then some slight consolidation, and then big fall, trending down, right? Trending down, Bank Nifty also, right? Bollinger Bands, the high volatile sideways is what Bollinger Bands is showing, but there is an expansion that's happening, started in the downside of the Nifty. Bank Nifty also small volatile, means less volatile, and fallen off the median bearish. So both Bollinger Bands are showing sideways, less and high Nifty and Bank Nifty respectively, and beginning of a bearishness when the trend expansion on the downside is happening. Support resistance level. So Nifty is now at a previous swing low, right? 16,800 to 900, that range is Fibonacci 38 retracement level, right? So there is always a chance whenever there is a previous swing low, and which was a resistance from previously, which acts as support now, there is a chance of a bounce, CIP bounce. That's seen in the Nifty and the Bank Nifty also. We cannot rule out that even in spite of this. That gap down also can happen next day. Some consolidation can happen after such big gap down, 500 plus kind of falls. So consolidation can happen next day. Support levels that is gone. Next support level 16,700 to 750. Then after that 16,550, 16,550, and then 16,400. Fibonacci 50 kind of. This is another previous swing low on the down. So let's see support, right? So that would mean some 400 points down, further down would be the next swing low. So that's what Nifty is. So net upside resistance would be, first resistance is 17,000 clearing, and then 17,200, 17,200, 300 entering, and then 7,400 range, and then Fibonacci 23 of 17,500, 17,600 range. Similarly, in the Bank Nifty, if you see, it has taken support of 37,000 kind of level, near to that. That's gone. The next support, that is 6,700, Fibonacci 38 retracement level. That goes in 35,900, 600, that range, and then 35,000 Fibonacci 50 retracement level range, right? So now in the upside resistance here, the first resistance would be 30 is clearing 37,400, which is Fibonacci 23 level. That's cleared, then 37,800 level, then that's cleared, then 38,000 level, and then above that 38,500 level, and then 39,000 level. So that's resistances on the upside and supports also on the Bank Nifty. Momentum is gone to bearish in the Nifty. Momentum is sideways still in the Bank Nifty, and that's it. On the medium term, it remains sideways, both Nifty and Bank Nifty. But on the daily short term, it remains bearish for Nifty and sideways continuation for the Bank Nifty. Trend is gone bearish, DMI negative, Nifty and Bank Nifty, and the strength is slightly rising now. That means bearish is more strength than Nifty, but it is not having enough strength in the Bank Nifty, but still it has crossed over to bearish zones on the short term. India VIX shot up 23%. That's big rise, big spike that has happened, and now it is almost near 23 is the India VIX level, which is a danger zone. You have to be extremely cautious. Stay out of the trade if possible. IV implied volatility is 25 and reached 97.5. So extreme fear is there in the markets. So open interest analysis, if you see for the February 17, 2022, the highest Put writing support is in a 16,000. After that 18,000 is the highest call writing resistance in at 18,000. 2,000 points of support resistance range is there on a Tuesday before the weekly expiry of Thursday. 16,500 also has got good put writing, while 17,500 also has good call writing resistance. Put call ratio is 0.456 is bear. Short build up on the futures open interest also bearish. Bank Nifty 37,000 and 39,000, 2,000 points of range is where the highest put rating and the highest call rating is. 36,500 has got good put rating, 40,000 also has got highest resistance. Call rating next at 0.56 is bearish, and short term futures open interest build up is also bearish. So open interest is clearly showing that there is bearishness in the market, and the heat map is showing clear red all over. All the sectors are down. Index aviates, all the index aviates fall, HDFC Twins fall, right? The Reliance fall, Infi fall, gap down fall for ICICI Bank, Kodak Bank big fall, Tata Consultancy is also big fall. So all across the sector and across the heavyweights, big fall in the markets. Sector performance, all sectors are down 1.54, 5% down in IT. Metal 5% down, 4% down auto, 2% down pharma, FMC 3% down, reality 5.5%. So everywhere it is down. IT is bearish zones in short-term momentum, sideways metal, and auto is in sideways momentum. Bank Nifty is also, pharma is also sideways. FMCG is turned bearish, so reality is sideways. So FMCG and IT is falling more than currently in the short term. So till the momentum is picked up the bullish zones, you just can't pick up this on the top-down approach of sectorial stock picks. Institutional selling, big selling of 4,250 crores of selling by Fyers, which is crazy. And the DAs interestingly bought, but that's not sufficient. So the retail is also might have sold a lot because of the fear that is there because of the Ukraine-Russia war crisis, right? Geopolitical situations, retailers might have sold big. This why market is falling just like that, right? But in spite 4,200 is also high level of selling that has happened, right? It's very high level of selling that has happened from the FI side also. So institutional selling remains the same, and dollar has shot up. You can see that the dollar index is rising, spiking a big wide range, great with momentum rising, and USD INR also shot up above 75, reaching almost 75.858 kind of level. So it's actually moved above the resistance zone, and then now the question is whether it's going to hit the next channel top or not near 77 or 76 kind of levels. So dollar is going down. Crude is also at the crazy up levels of 91, 92 kind of levels. So if you see here with great momentum, crude and gold is trying to break out and hit the 1876 zone. So crude is down and dollar is spiking up and rupee is weakening and FIs are selling and retailers are also selling. Global Qs are really poor. So all this combined together makes market fall down. US markets has to be close watch today, the Monday opening, whether we'll have to see whether the support gets broken in the Dow Jones and whether S&P 500 is also losing the momentum to the bearish zones, and this trendline support is breaking or not in the S&P 500 and USA 100 is what we'll have to check today. So if that bounces up from here, then we may have some hope of a consolidation at least on our markets. Otherwise, markets are likely to continue the bearish zones. No specific action because the VIX is very high. Right, only short stock buying, cash buy on dips is the only actionable. Wrap up. Bearish in the short term is what charts are saying. Support resistance levels are showing that. Momentum is showing that. Trend is crossing out to bearish zone. So clearly bearish is what charts are talking about. Now markets are gap down 3% and 4%. 1,600 points in single day. So that's a kind of bearishness. So there may be a dead cat bounce. Up or some kind of consolidation that can happen in the coming days, but overall trend is turn to bearish. US markets is the biggest worry. If they are remaining the support or they are bouncing back or consolidating is all what the people in the markets will be watching. Volatility is spiked up above and 23 level is crazy. We have to be very cautious if you're trading. FIs are selling bigger and AIs buying is not enough. Retail is also panic and then selling more. Positive factors, if you see, it's like Bank Nifty is still sideways in momentum. And also it is at a both indices are at a swing low support zone. So there's a possibility that it can bounce or consolidate at this point, right? So always stay away from trading until the VIX cools up a little bit is what I would suggest. Start picking up good quality stocks in the SIP mode when the market is having a dipping in the cash market. Options if you're playing, always do with hedge risk defined strategies. Counter spreads can benefit in the case of IV spiking and cooling off. That benefit you can get it. And double counter spread strategy or things like that may work out. Right, so it's a bearish view that I have that helps you to frame your own view on the market for the next day and have your own trade plan. Then if that helps this video is going to help you some way, then consider hitting the like button and share it to maximum people. We have very few subscriptions, so your help in this regard will be highly appreciated. Thanks. Happy trading, happy learning. Bye.